Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Olivia Grace Curran. Well, US stocks tumbled on Thursday after President Donald Trump's declaration that tariffs on Canada and Mexico will proceed as planned, while Nvidia earnings also pulled indexes down. The S&P 500 and Nasdaq ending sharply lower, the Dow also finishing in the red. Nvidia dropped after the AI heavyweight gave a weaker than expected quarterly forecast for gross margin that overshadowed an upbeat revenue forecast. Chip makers Broadcom and Advanced Micro Devices also falling. Shares of Salesforce dropped after the business software seller forecast fiscal 2026 revenue below expectations. Snowflake rallied after the data analytics provider forecast fiscal 2026 product revenue above estimates, while shares of Dell Technologies tumbled ahead of the company's Q4 report scheduled for after the bell. HP shares also slipping ahead of Q1 results. Shares of space exploration firm Initiative Machines fell after launching its second lander on a SpaceX rocket on Wednesday, set to land on the moon's south pole on March 6, while Warner Brothers Discovery jumped 10% after saying it expects streaming profits to double this year. Bath & Body Works shares fell following weak annual sales and profit forecasts. And shares of gold miners slipped as bullion prices touched their lowest level in more than 2 weeks. US President Donald Trump says his proposed 25% tariffs on Mexican and Canadian goods will take effect on March 4 after his administration's concerns of insufficient progress on curbing fentanyl flows into the country. In a post on Truth Social, Trump announced an additional 10% duty on Chinese imports, where he says drugs such as fentanyl are being produced and supplied, resulting in a cumulative 20% tariff. Canadian Prime Minister Justin Trudeau says Canada will have an immediate and extremely strong response if the United States imposes tariffs on Canadian imports on Tuesday. Meanwhile, British Prime Minister Keir Starmer has said he will work with Trump on a new economic deal with advanced technology such as AI at its core. On the US data front, weekly initial jobless claims rose by 22,000 to a seasonally adjusted 242,000. Other data from the Commerce Department showed gross domestic product increased at a 2.3% annualized rate last quarter after accelerating at a 3.1% pace in the July-September quarter. Investors are now focused on monthly personal consumption expenditure data, which is the Federal Reserve's preferred inflation gauge, due on Friday. Federal Reserve Bank of Cleveland President Beth Hammack says she expects the US central bank's interest rate policy to be kept on hold for the time being, while Philadelphia Federal Reserve Bank President Patrick Harker has expressed support for continuing to hold short-term US borrowing costs in their current range. US Treasury 10-year yields rose as markets awaited key inflation report and digested mixed economic numbers. 10-year Treasury notes rose 4.1 basis points to 4.29%. The 2-year rose 3.2 basis points. The US dollar jumped on Trump's latest tariff comments. The pound has weakened, while one Aussie dollar is currently buying 62.3 US cents. Bitcoin has slipped further, currently around 84,000 US dollars. Oil prices rose more than 2% as supply concerns resurfaced after US President Donald Trump revoked a license granted to US oil major Chevron to operate in Venezuela. Investors also keeping an eye on signs of a potential peace deal in Ukraine. Brent crude oil futures were up 2.1%. Gold prices dropped to their lowest level in over 2 weeks as the US dollar strengthened, and copper prices fell on fresh global trade war worries after US President Donald Trump's proposed 25% tariffs. For more on what's moving markets, I caught up with Cardillo from Spartan Capital earlier.
Well, that's given the markets a bad case of indigestion here. Obviously, we have a very jittery market, but that's the tariff is not the only factor here. There are other factors. The fact that the economy is slowing, the fact that inflation remains elevated, and we'll probably um, see that in today's PCE price index, which is likely to show a little bit of an improvement, but nothing that would reverse the sticky inflation situation. And then, of course, you have an unclear path to interest rates. And so these factors are weighing on the market. And obviously, yesterday's decline was led by NASDAQ. Um, I'm not sure if the impact was totally on Nvidia, but certainly, at the beginning of the session yesterday, the market did well, and then it reversed and it fell down sharply, and that was because of Nasdaq, and that goes to the fear factor of the unknown of the tariffs, and with Trump having announced that on the 4th of March, 25% tariffs are being imposed on Mexico, Canada, and an additional 10% on China. That's basically spooking the market.
All right, and you mentioned that you believe his proposed tariffs on automobiles, chips, and pharmaceuticals may trigger a recession.
Well, yeah, I mean, if the economy continues to slow, and yesterday we saw the jobless claims that they were up 22,000, and that's a result from the layoffs in Washington, the government laying off massive amounts of people, and so this is just the beginning of the jobs claims moving higher, and that means a weaker labor market, and that means it's probably going to be harder to find a job. And so, if this continues and we don't get a resolution to the tariffs, by that I mean, even though the tariffs may be imposed, maybe, a month from now or 2 months from now, there will be some sort of an agreement between Canada and Mexico and China, and of course the EU. Trump has threatened to put 25% um, tariffs on the EU. So what we're hoping here for is that even though the imposition of tariffs moves forward, that there will be at one point a bargaining. There will be bargaining, and these tariffs might be, eliminated, and that obviously would change the situation. Right now, what we're seeing here is that the pendulum has shifted from pessimism to pessimism, and that's what's causing this uncertainties.
On the tariff comments from Trump, we've seen the dollar pushing higher. So where do you see it going from here?
Well, as long as there is a threat of tariffs, and as long as the tariffs remain in place, I think the dollar continues to rally. If you look at the dollar index yesterday was quite strong, and so there's a good chance that we can go to 110 here, which means a stronger dollar. And the fact that that the administration is trying to reduce the huge deficit. Of course, it'll take time, but they're moving in that from that perspective. They're moving in the right direction. That'll just um, certify a strong dollar.
Now let's talk about gold hitting record highs last week. It's today touched a 2 week low. So what do you see for this commodity?
Well, I don't think the fundamentals in gold has changed. In fact, they probably strengthened here. But what we have witnessed is a reversal in gold's technical aspect. It for about at least 5 or 6 sessions, it moved to that 275, 276 range, but could not take out that resistance at that level. So I think what happened here is a breakdown in the technical aspect, and that's caused gold to actually drop under 2,900. But I don't expect it to last for a long period of time. I think this technical correction will probably be short-lived.
And just quickly on oil, Trump has cancelled Chevron's Venezuela license, and we've seen prices rise.
Yeah, that basically is what took oil prices up yesterday. But again, it boils down to demand. And if we do go into a full-scale trade war, that demand is going to dwindle, and that means that prices are headed lower. I wouldn't be a bit surprised to see oil prices go down to the low $60 area.
Peter Cardillo from Spartan Capital. And just before we go, getting one final check on where the local market is set to open when trade gets underway. SPI futures are down 68 points. That does it for this edition of The Global View. Stick around, the open is coming up next.